Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, good morning. I don't know, I feel like I'm like too far away, or I don't know. Something feels off. Something feels off, guys. Well, we have continued to move higher in Treasuries. So very interesting. E-mini took a decent move down, but it wasn't really much more significant than the day before. And then they recovered a little bit. ZN, on the other hand, has beaten out this previous high at 121.20 and is pushing higher. And I'm not really quite sure what's going on. But for some reason, Treasuries want to move higher. I don't know if they can keep this up today. You can see they're on the up and a little bit of volume, but it's at the high. And I don't know. It's kind of weird. Kind of a weird setup today, to be honest. All right, well. Let's get the links and just, see what happens. Dum bum bum ba-dum. I was thinking the other day, I think I need a browser source. It doesn't work anymore. Never mind. I have to reset it up because it's not. I was watching a video yesterday and I realized that you're not getting the Discord messages, which are the ones that you need for the video. Right. Because otherwise I'm like watching the videos later. I'm like, what are they talking? Why? What is he talking about? All right. Here's the first link. Okay, ECB. It's ECB day. Let's see here. The press conference starts at 6:30.
Sin Elliott sent a letter to Friesen Cup CEO in December. That's Reuters there citing sources. Elliott expressed doubts over the Friesen Cup's plan to split in two in a letter.
We'll grab this and bring it over here for us. Oops. Make it smaller so we can listen to the ECB. And put it right there. Yeah, like that. There. How's that? Minimize these. Okay. Yeah, so Dizzle, I was looking at that and I couldn't figure it out. Okay, anyways, so it's a Thursday. We do get numbers at 6:30, and unemployment claims, flash manufacturing PMI. These are flash manufacturing PMIs at 7:45 though, but that's a key number too. And then we got the ACB press conference. So I think that we'll get a trading opportunity at the bottom of the hour, and
We
then
are just
we'll
3 minutes
listen
away
to
from the
the.
bottom of the hour and the US data. Initial jobless claims looking for an estimate of 220,000. Continued jobless claims looking for an estimate of 1.735 million. And the 4-week average for jobless claims a prior of 220.75 thousand.
So we'll see what happens after the news, but I'm
Just
kind
a
of.
reminder, when Mario Draghi is speaking, we will be quiet unless he says something major. And for our premium listeners, we do have the dial-up service.
Anyways,
And we do have a link to the press conference on our board.
I'm looking for this to reverse. It just seems a little bit too much. And for no real reason. I mean, maybe it's because of the ECB, but like they were not doing anything unexpected, you know? So I think move to this level, it seems a little out of place to me. It just seems a little out of place to me. But I'm not too sure, obviously. I don't completely understand how it got here, so you gotta be extra cautious about it. Mm. Just make sure I'm not streaming to myself. Oh, I don't have the chat open.
1 minute.
Where is it? There we go. There we go. Okay. Cool. How's that look?
10 seconds.
Yeah, and I hope you guys can hear it okay. Okay. There we go.
199,000 there for the initial jobless claims. The prior revised to 212,000 from 213,000. Continued jobless claims coming in
So
at
that's less than expected.
1.713 million, and the initial jobless claims 4-week average coming in at 215,000. The prior also revised to 220.50 thousand from 220.75 thousand. Just to repeat, that initial jobless claims coming in at 199,000.
That actually sounds significant to me, but they're not like taking it super fast. I know. I didn't think anybody's gonna get filled on limit here, so and it's being slow, so I'm just gonna kind of watch. See, I feel like that could keep going, but they're already stopping it, or at least tapping the brakes.
Just a quick reminder as well that we will stay quiet over Draghi, but we'll bring any major headlines that do cross.
Yep, tick up. There's the man. See, look at the setup that the Europeans have. It's all, they have like the walk up and all of the reporters. It's like a rock star walking in. Ours is nothing like that. And I like that they got the three people up there. It's so that it's not just him.
It's a comment here from Wilbur Ross saying US-China miles and miles away from trade resolution.
Very pleased to welcome you to our press conference.
A piece here
We
from
will
Sky
now
News as well saying a
report on
hard
the
Brexit
outcome of
would
today's
cost forward
meeting
800
of the
million this year
Governing
alone
Council,
from WTO tariffs
which was
and a weakening
also
pound.
attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels, at least through the
Ross
summer
saying large
of
China
2019.
delegation coming next week to talk trade.
And in any case, for as long as necessary to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Regarding non-standard monetary policy measures, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the Asset Purchase Program for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an
So Ross saying they're too early to judge where US-China trade talks are headed.
The incoming information has continued to be weaker than expected on account of softer external demand and some country and sector-specific factors. The persistence of uncertainties, in particular relating to geopolitical factors, and the threat of protectionism is weighing on economic sentiment. At the same time, supportive financing conditions, favorable
Notice that the delta is overall negative,
and rising wage growth continue to underpin the euro area expansion and gradually rising inflation pressures. This supports our confidence in the continued sustained convergence of inflation to levels that are below
Draghi saying significant stimulus still needed to sustain inflation.
Significant monetary policy stimulus remains essential to support the further build-up of domestic price pressures and headline inflation developments over the medium term. This will be provided by our forward guidance on the key ECB interest rates, reinforced by the reinvestments of the sizable stock of acquired assets. In any event, the Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation continues to move towards the Governing Council's inflation aim in a sustained manner. Let me now explain our assessment in greater detail, starting with economic analysis. Euro area real GDP increased by 0.2% quarter on quarter in the third quarter of 2018, following growth of 0.4% in the previous 2 quarters. Incoming data have continued to be weaker than expected as a result of a slowdown in external demand, compounded by some country and sector-specific factors. While the impact of some of these factors is expected to fade, the near-term growth momentum is likely to be weaker than previously anticipated. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions, further employment gains and rising wages, lower energy prices, and the ongoing, albeit somewhat slower, expansion in global activity.
Well, I don't think that that's the right price.
Surrounding the euro area
Draghi
growth
saying risks to
outlook
economic outlook have moved to the downside.
On account of the persistence of uncertainties related to the geopolitical factors and the threat of protectionism, vulnerabilities in emerging markets, and financial market volatility. Euro area annual HICP inflation declined to 1.6% in December 2018 from 1.9% in November, reflecting mainly lower energy price inflation. On the basis of current futures prices for oil, headline inflation is likely to decline further over the coming months. Measures of underlying inflation remain generally muted, but labor cost pressures are continuing to strengthen and broaden amid high levels of capacity utilization and tightening labor
Draghi saying
markets.
underlying inflation to increase over the medium term.
Looking ahead, underlying inflation is expected to increase over the medium term, supported by our monetary policy measures, the ongoing economic expansion, and rising wage growth. Turning to the monetary analysis, broad money M3, broad money growth moderated to 3.7% in November 2018 after 3.9% in October. M3 growth continues to be backed.
Did you catch that bubble there in the 5-year?
Ross saying here that if there's a fair chance that US-China arrive at a trade deal.
Remained the main contributor.
Repeat that one, then Ross saying as well that there's a fair chance that US and China arrive at a trade deal.
To non-financial corporations stood at 4% in November 2018 after 3.9% in October. While the annual growth rate of loans to households remained broadly unchanged at 3.3%. The Euro Area Bank Lending Survey for the fourth quarter of 2018 suggests that overall bank lending conditions remained favorable, following an extended period of net easing, and demand for bank credit continued to rise, thereby underpinning loan growth. The pass-through of the monetary policy measures put in place since June 2014 continues to significantly support borrowing conditions for firms and households' access to financing, particularly for small and medium-sized enterprises, and credit flows across the euro area. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary policy measures,
So hold
Other
up
policy
after the
areas
conference
must
so we can
contribute
talk
more
about that, but it's
decisively
not
to
really doing a whole
raising
lot.
the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost euro area productivity and growth potential. Regarding fiscal policies, the Governing Council reiterates the need for rebuilding fiscal buffers. This is particularly important in countries where government debt is high and for which full adherence to the Stability and Growth Pact is critical for safeguarding sound fiscal positions.
Ross saying unlikely next
Likewise, the
week will result in
transparent and
final trade
consistent
solution.
implementation of the EU's fiscal and economic governance framework over time and across countries remains essential to bolster the resilience of the euro area economy. Improving the functioning of the economic and monetary union remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital markets union. And now we are at your disposal for questions.
Piotr Skolimowski, Bloomberg. My first question relates to your assessment of the risk of move to the downside. What sort of implication that will have for your policy, especially for your forward guidance? And my second question, you told us in December that at some point you will ask committees to start work on TLTROs. Have they already been put to work? Have they been tasked with looking into TLTROs? Thank you.
Thank you.
Think I can get it again?
Well, today we didn't discuss the implications. Today's meeting
Draghi saying we didn't discuss
was
implications of
essentially
changing balance
devoted
of
to an
risk.
assessment. Where are we? And why are we here? How long will the slowdown last? Is the slowdown going to worsen or stay?
So you talking about the economy or life there?
Lower path. These were the questions that were asked. And on the second question,
Draghi saying that several speakers raised issue of TLTRO, but no decision
speakers
taken.
actually raised this issue, but no decision was taken.
Okay.
So it was because we didn't discuss policies this time. We only were focused on the assessment. Quite clearly, the assessment will have implications about policy, but we didn't
Draghi
discuss
says quite
them.
clearly assessment will have implications on policy.
Thank you. Balázs Korányi from Reuters. Two questions as usual, Mr. President. Given that data have disappointed on the downside fairly consistently since your last meeting, what gives you confidence that your economic assessment is actually correct and there's going to be a rebound? And my second question is quite similar, which is about core inflation. You predicted a vigorous rise in core inflation towards the end of last year. It didn't happen, and it's still not happening. Again, what gives you confidence that your assessment is correct?
It's basically one question, really. And you see, underlying inflation has been muted. It's been moving sideways. It's higher than the low levels that reached about a year ago. And it does, on what our confidence is based. It is based on the continuation of the economic expansion. It is based on the strong labor market performance, though it's slowing down.
So it's looking weak there at 23.5, but they're not holding it down. They're not. It goes offer, but they don't hold the offer.
Growth has gone up, especially, of course, in the core countries, and especially in Germany.
Okay, that time they held the offer.
Both compensation per employee and negotiated wages show a pickup, consistent, significant pickup. So the issue is, so we see all these components moving in the right direction. And so the question is, why haven't they passed through? Why aren't they being passed through into higher prices? And what we are observing is that there is a profit squeeze. So it's a matter of time. That, of course, this pass-through will happen First,
Draghi saying
in
that there
the
is a
parts
profit
of the
squeeze in a matter of
Eurozone
time
where the
before higher
labor market
wages
is
are passed
stronger,
through. And he
unemployment
says he
is
sees
lower,
wages and labour
especially
market
in some
data
countries
moving in
where
the right
basically
direction.
there is full employment, and then gradually will expand to other countries. That is what really gives us, and then of course the financing conditions and our monetary policy that remains fully accommodative strengthens our confidence in this process.
Ms. Weisbach?
Annette Weisbach, CNBC. I have two questions. You were saying that this meeting was more or less for the assessment of where we stand when it comes to the economy and how long the potential downturn will last. So how long will it last in your view? And another question is whether you're happy with what the market is pricing in terms of interest rate hike, because now the market is only pricing in the first hike in 2020, and you're still guiding us more or less for like the fall period of this year. So what's your view here? Is the market right, or do you need to upgrade or update us on your forward
That's a
guidance?
dangerous question.
Okay, since you're all asking, let me give you a summary of the meeting now. So, first of all, what you care most, were we unanimous?
Draghi said the ECB was
We were
unanimous on
unanimous
risk
about
assessment.
acknowledging the weaker momentum and changing the balance of risk for growth.
And unanimous in
We're all
assessing factors causing the
in agreement
slowdown.
on that. And we were unanimous in assessing the factors that have caused the slowdown. Namely, first and foremost, there is an increase in general uncertainty. This increase in general uncertainty is being produced by the threats of protectionism, doubts extensive doubts about the multilateral rules that have underpinned our growth since the Second World War. The protracted and unclear outcome, the protracted negotiations and their unclear outcome yet about Brexit, and of course the implications that this might have. I've said many times that if you compare the potential disruption coming from Brexit for the aggregate of the euro area, well, just looking at aggregate numbers, it doesn't seem to be an extensive disruption. But we have to take into account things like value chains, and we have to also to take into account some countries are more exposed, of course, to events in the Brexit case. So we follow that, but that just is a sign of a contribution to the increase in general uncertainty. And then, of course, we have the political
there's
developments
definitely a change.
in
Like,
some
this is the
countries
point
in
of
the
control,
Eurozone.
and I had a hard time getting filled there.
This is one set of factors. There is
It's not a
another
good
set
sign.
of factors that is specific factors that are specific to certain countries. And this has to do with the slowdown in China and the waning effects of fiscal package in the United States and the car industry in Germany. So all this, it's a pretty long list of factors. So the issue is now, and that's again, there was unanimity in saying that the key aspect to assess is the persistence
Humidity's doing weird stuff.
of the general uncertainty as being produced by these factors. And this certainly, if all this were to persist, we should expect a longer weak momentum.
Draghi saying if
beyond
factors
the
were
near
to
term.
persist, we should expect
So,
a longer
And then
longer
finally,
weak
there was also
momentum.
quite, I would say, unanimity about
Says
assessing the likelihood of a recession
Unanimity
as
on
being
assessing likelihood
low.
of recession
Now,
being
again,
low.
I don't want to give numbers here, but some of them are very low. Others are on the average since the last 60 years or 50 years. So, in any event, pretty low. Of course, again, in an area like the Eurozone, these estimates ought to be taken with some caution, because if you have a recession, serious recession in one part of the Eurozone, that can spread to other parts. But basically, there was unanimity about assessing this likelihood as low. Also, why was it low? Because financing conditions continue to be basically very favorable. Developments in the labor market continue to be positive. Nominal wage growth continues to be significant. And of course, the lower energy prices support disposable income, real disposable income for households. But also there is another factor to keep in mind that makes the present situation different from the situation we had at the beginning of the great financial crisis. That this time, banks' balance sheets are much stronger than they were before the crisis. Now, of course, we have local episodes of weakness, but by and large, the banking sector is much stronger than it was at the beginning of the crisis. So the conditions for a continuation of credit to the economy are in place. Then the discussion focused on persistence. Again, then there were two viewpoints. For some, as usual, China, the slowdown in China won't last long because we have confidence, and we do have confidence in the government's measures. And everything we know says that the government is actually taking strong measures to address the slowdown. The trade disputes will wane. In the end, the Brexit thing will not affect the EU economy that much. But especially there was one aspect of the discussion is that all these uncertainties, all these risks are being addressed by the policy response of the authorities in these countries. The specific episode of
that
the car
ticked
industry
down
in
on almost
Germany
nothing.
will soon wane out because there is going to be a rebound in the sector. One thing that basically, of course, we all agree is that if there is going to be clarity,
but they're not actually
on the
ticking into
exports
23 yet.
and the trade sector, much of what we are seeing today in terms of weakness will very likely wash out. For others, however, the downside movement in all industries, in all indicators, both hard and soft, has lasted now several quarters. And all these risk factors are not going to disappear, and they are affecting confidence. So you see, these are the two perspectives in the assessment of persistence, having agreed about everything else. So the conclusion of all this is that the Governing Council will give itself more time to assess whether all these risk factors have affected confidence.
Good deal.
And we are going to have another discussion in March when we'll also have the new projections.
Why am I in a position during
about
such an important
inflation,
economic announcement? There's
course,
enough liquidity
going
to
back the other
to
question
be
I
safe
had,
to trade.
focused in
It's not normal behavior, maybe, but
it's been driven by oil prices mostly.
I mean,
but
I'm
also
still seeing
from
order
food
flow
and
signals,
services
so-
prices to much lesser extent, and on underlying inflation. And here I basically gave you the sense of the
As long as I'm
discussion
seeing
answering your
4 to
question.
5 Ks somewhere on the 10-year, it's safe for trade.
Now, of
so.
course, if this momentum were to last long, and if the convergence were to happen around growth potential or even below growth potential, of course, the time that will take for the inflation to converge to our aim and objective will be longer. But all throughout this, and again, there was agreement about the monetary policy that has been accommodative, very accommodative. Even though we stopped the net asset purchase, it wasn't a tightening, as some people
Wishful
have said.
thinking.
Actually, it's been very accommodative for a variety of reasons. The term structure curve.
I'm just
the,
concerned about what I'm
flattened-
seeing at 23.
The term
So
premium is negative, and so even the discount component to stock prices has contributed to stock prices to keep them higher. And most importantly, liquidity conditions are abundant and will remain abundant. So as I said, several speakers mentioned the TLTRO, and that's it. I'm sorry? Which was? Oh, yeah. Well, you see,
I don't know why,
that
but
was asked the
my
same question
eyes
last
are
time.
watering
Not
a
sure it
ton
was you,
today.
but the fact that the market, let's go back to our forward guidance, and says we intend to continue reinvesting in full the principal payments from maturity. No, the other part of the forward guidance is we continue to expect the key ECB interest rates to remain at their present levels, at least through the summer of 2019, and in any case for as long as necessary to ensure the continued sustained convergence of inflation. So it's both date and state contingent. When markets place the first rate hike in 2020, they are using the state contingent part of our forward guidance. They assess the economic prospects that way, and it shows that they have understood our reaction function, and in so doing, in the flattening of the yield curve that has taken place continuously, by the way, since we announced the end of the net asset purchases starting in June last year, they are providing accommodation through that channel.
That
of course,
concerns
we have
me.
to assess then the developments, and if
So
this
that
persistence will continue, we'll have to validate.
I continue to
the
see what
situation.
what
But at this
actually
point in
got me
time,
out
just
there.
assess
So
the situation.
I was able to take that 4 times. That's funny.
Thank you. Tom Fellis from the Wall Street Journal. I had a question about negative rates and the persistence. I suppose negative rates have been in place for 3 or 4 years now, and you're 4 years.
No, you know better, I'm saying. You know more than we do.
And if markets are correct that negative rates would continue for another year and a half, would the ECB need to do anything to mitigate that? I think in last time you mentioned that you were concerned about the impact on banks. Would there be a way to introduce a tiered deposit rate, for instance, or to a limited interest rate hike? And my second question is on who else could be helping out if the weakness continues. How much of the onus will be on governments, and in particular Germany, I suppose, which is the big country that has got fiscal space to cut taxes or to increase spending?
Thank you. Well, we have to see, I'll answer the second question first. We have to see first how protracted this slowdown is going to be, how persistent the factors that have originated this slowdown are going to be. And this applies to fiscal policy as well. By the way, fiscal policy in the euro area now is slightly expansionary, certainly more expansionary than last year. And this is true in Germany, but also true in many other countries, if not all countries, I think, of the euro area in their draft budgetary plans.
So now the 5 years become extremely range bound at around 12
on the
3/4.
first point, let me just go back about what I think I said last time. Negative interest rates affect negatively the net.
By the way, you guys can hear me over the
margin.
volume just fine, right? Like
And,
all the
that's
volumes sound
almost
good.
a tautology, but especially because interest on deposit is set at 0. But when we look at their effect, the effect of negative interest rates, which, by the way, have been a very effective monetary policy measure, and it is an effective monetary policy measure now. It remains so. So when we look at the effect of negative rates on profitability of the aggregate of the banking sector, we see that
OPEC's
by
Burkindo here
and
saying we are
large,
focusing on
the
keeping all
positive
inventories
effects
below
of the
5-year average
recovery
ahead of April
generated
meeting.
by the more
Burkindo says we
accommodative,
have
more
seen aggressive
expansionary
supply
monetary
cuts
policy
by leading producers
produced
to
by the
avoid a
negative
Q1
rates
inventory build.
compensate, offset each other. And we'll have to see now how will the continuation of negative rates will affect this balance. But let me also add another factor, that profitability in the Eurozone, banks' profitability is affected, I would say in many cases, much more significantly by factors like cost coverage ratios that in some countries are way, way above any average, by the presence of stocks of non-performing
See, my problem
loans
is that I still
that
kind of
by
want
all
to be
accounts
short,
are
but
way
I
above
don't
any
like that
average.
the
By
bottom of this
overcrowding.
range right here
So
is
there
at
are
that point of control.
structural
That's kind of
and,
weird.
business model
That's not
specific
a good
factors
sign
that
for
affect the
more
overall
downside.
profitability. And it's in this sense that I said we
And
will
there was
continue to
aggregate
monitor
selling,
the
but it's
profitability
not
of the banking
affecting price
sector
at all.
very, very closely. And what I just said
The
shows
30
how
years
important
seems
this
to
is,
show some
because that's one
significant
of the
sell
main
pressure now.
main differences between now and the situation we had before the crisis. The main difference is that banks are strong now.
When will Bitcoin
Or at least
finally dump?
stronger,
I don't know.
Certainly stronger than they were
It might take a few
before
months.
the crisis. And this is a key for making sure that any downturn in growth doesn't transform itself into a recession.
Ms. Jones?
Claire Jones, Financial Times. Mr. Draghi, you're joining the Federal Reserve today in acknowledging some of the
Okay.
concerns that people have over
Now we're
the,
finally getting
the
kind of
global
what I
economic
was
outlook,
more
but I
hoping
think
for.
The Fed has also been clear that it's going to react to that by doing probably less rate hikes this year. Whereas even though the balance of risks has changed today, there's not so much of a sense about how exactly you're going to react to that. So would it be possible for maybe you to spell out a little bit about what you see your reaction function as being? For instance, how would you weigh up the TLTROs? Are they something distinct to a maintenance of a loosening stance? Are they more about dealing with liquidity in the banking system? And how important is the forward guidance on rates vis-a-vis the forward guidance on reinvestments? And just a quick second question, if I may. The bank lending survey seemed to point to a tightening, an anticipation of a tightening in demand for credit over the coming quarter. So how much of a concern is that? Thank you.
Thank you. I'll answer the second question. You're right, it does point to a tightening, slight tightening, but the result of that figure is mostly centered in Italy. So it's a tightening that's not spread to the rest of the Eurozone. On the other question, well, we are still in the assessment mode. And today's meeting was about that, not so much the policy mode. But let me say, at the very beginning, the nature of our forward guidance, which is both, it is date, but it's also
I'm hoping that they have another little
has already
push up
produced a reaction
and maybe
in
give us
terms
a
of
signal.
increasing
But
the degree of
because I
accommodation of our
still
monetary
prefer the
policy.
short, but I don't
And,
know.
It's been producing this
You can't do it
reaction
at
over the last
22.
several months, flattening
I
the
don't know
curve
how much
and going and producing all the effects I mentioned before.
how much momentum it really would
Now,
have to the downside. So 22 is not
What is
a
next?
trade I can take.
Next will depend on
Even
whether
though I
we
can
will
kinda see
end
it.
up assessing this slower growth as
There's a big iceberg
or the
there.
factors that have produced this lower growth as persistent. And then we will consider different contingencies and different elements. And of course, I don't want to speculate about what contingency would call for a specific instrument. But if you look at the number of instruments we have in place now, we can
Mr. Draghi
conclude
has
that
said
it's
the
not
ECB
true
hasn't
that
run out
the
of instruments.
ECB has run out of fuel or has run out of instruments. We have all our toolbox still available. Thank you.
And Draghi said the ECB has a full toolbox available.
Alessandro Barbera, La Stampa. Mr. President, you just said that you didn't take a decision about the new TLTRO for banks, but I'd like to ask you if you think they should be useful for banks, and what do you think, what do you answer to the German economist who's saying that a new TLTRO should be a gift, a subsidy for Italian and Spanish banks? Thank you.
Now, ELTROs and TLTROs, both of them, have been very useful and very effective.
I think maybe if I had kept
Very
my short
effective in
at 23, I would
restoring
maybe even have to think
transmission
about
of
taking it
monetary
off here.
policy across the euro area.
Not that doesn't mean that he can't go, but it's just uncertain still.
2012, the TLTROs came later. They were more targeted to lending, but they've been unquestionably effective. So what, in a somewhat more, I would say, polite way, what these economists are saying is, if we are to do TLTROs, there should be a good case for monetary policy. In other words, we want to have TLTROs or LTROs to address cases of existing or likely fragmentation in the monetary policy space. In other words, we don't want to be again in the situation where we were in 2012, 13, and 14, where we lowered the interest rates, policy interest rates, and this was not translated into lower lending rates. And so if that's necessary, we'll do whatever is necessary for to address this point. It's not. What they're saying is that there must be a case of monetary policy for doing it. So it shouldn't be something that we do it and they're right. I mean, as a sectoral measure, as a country-based measure.
Mr. Stumpf?
Draghi saying there should be a more monetary policy case for the TLTRO, and it shouldn't be for sector or country.
Concrete instruments do you have to adjust in case of a weaker scenario? You said you had the full toolbox, but some have been in place yet already. And then I would like to ask about the situation of the illegal phone tapping that surrounds the former president of BBVA in Spain. I would like to know the ECB position about, and if it can do anything if there's a reputational risk for the bank. Thank you.
Thank you. I have answered to the first question already. Some of our instruments have already been playing their accommodative role in the past few months. Others may be acted depending on the evolution of growth and of the factors that have originally produced this lower momentum. On the second question, I would ask the Vice President to respond.
With respect to the second question, as you perfectly know, BBVA has launched an internal investigation that is underway. And today it has announced that it has started also a sort of forensic probe that is going to be conducted by a third party. And I think that we have to wait for the conclusions of these probes and these investigations. We expect that the conclusions will be available as soon as possible because in this kind of circumstances, time is of the essence.
Mr. Zydra?
Markus Zydra, Süddeutsche Zeitung. The German government is clearly favoring a merger of Deutsche Bank and Commerzbank. And so what is your take on that from a supervisor's perspective? Would you oppose that plan?
I'm sorry, I can't answer this question. I'm not commenting on individual institutions.
Mr. Bonderman?
Thank you. Mr. Draghi, you just said the whole toolbox is still in place, but in case a downturn were to become a real recession with serious negative effects on inflation, would the ECB have enough policy space to respond with interest rates already at zero or sub-zero, and with QE already having reached its limits, the capital key and the issue limit? Thank you.
Well, you see, when I said we still have instruments in our toolbox, first of all, let's go back to when we announced the end of the net asset purchases, which was June last year. At that point in time, we actually we decided well, there are several things. We decided to stabilize the existing stock. The stock of bonds we own is not indifferent. It's pretty big. It's more specifically, it's 25% of total government debt and eligible universe now. So to stabilize to stabilize the stock by itself does require purchases of bonds every month, which this year is about of the order of 15 billion euros, which was by and large the same amount we were purchasing on a net basis until December. But the important thing for judging, and the result of, important thing for judging whether this is contractionary or is accommodative, is the stock relative to the volume of bonds, and I said it's 25%, but also the evolution. And we don't expect the stock of government bonds to increase in the future. As a matter of fact, the stock of government bonds has been declining since 2014 in the aggregate of the Eurozone. Of course, we have exceptions, but what matters from our viewpoint is the aggregate of the Eurozone. So the stock of the volume of long-term bonds is not growing, and we expect it falling until 2021 by and large by 6%. So the pressure on rates will be less and less by itself, and which also says that liquidity will remain very abundant well into the next decade. So when you
Draghi saying the pressure on
when
rates
you go
will
and
lessen
measure
by itself,
this,
and liquidity will remain abundant
you see
into
what I think
the
was I
next
said
decade.
before. When you look at the risk-free rates across maturities, you see both the level and the shape of the term structure. They've gone down. They've flattened the term structure, and the level has been going down. Now, 10-year bonds are now lower by 20 basis points since June, and rates kept on going down. So by itself, this provides accommodation. Now, so then the rest I think I've said. Now, of course, the spreads is a different issue. The spreads in different countries or for certain segments of the bond market have evolved depending on specific.
It's been here for such a long time. If I had kept that, I'd definitely have to be getting out here now.
Mr. Wiebe?
But of course, let me finish. We have a long list of instruments now. We have the reinvestment, we have the forward guidance, state-based, we have the APP, we have TLTRO, we have lots of instruments, and we stand ready to adjust them or use them according to the contingency that is produced.
Frank Wiebe, Handelsblatt. Just another topic. Is there any news about a possible successor for Sabine Lautenschläger in her function as a supervisor? Do you have anything for us?
No, I'm sorry, not yet, but you will know it.
Well, we have to ask.
You will know it soon. No.
Mr. Heitman, please.
Luke Hyson, Market News. Mr. Draghi, have your views on the scale of the potential downside risks from Brexit evolved since last week's House of Commons defeat for Theresa May? Would you expect your assessment of those risks to change in the event of a general election in the UK? And my second question was, could the same issues that suggest a first interest rate hike may be delayed well beyond this summer also have the potential to be positive
they're selling
risks?
15.5
For example,
now.
if we get a soft Brexit, a US-China trade détente, or as you suggested it will, China responds well to the government's stimulus measures. Should the markets also prepare themselves for the surprise of a rate hike this year?
Thank you. Well, the first question is definitely too difficult for me. I can't answer that question because I just wouldn't know.
Took it down.
Now,
they might actually see
the
VWAP.
question is, in the sense that the account I gave you of the debate, of the discussion we had in Governing Council answers this question. One part of the participants doesn't, let me put it this way, doesn't exclude, because we are not yet at the level of having certainties, but doesn't exclude a all in all, a more benign outcome. And another part is closer to exclude this and just work for the downside. So it's and therefore the consequences of this discussion will reverberate in the market rates.
Mrs. Laird? The mic's coming here.
Thank you. You've spoken a number of times about your optimism that tightening labor markets and rising wages will help inflation converge toward the ECB's target. We've seen tightness in the labor market in the US for some time now with very little resulting inflationary pressure. So what makes you think that the Eurozone wage recovery will be different than what we've seen in the US?
Well, actually, it's not that different because in the US, you've seen inflation hovering around 2%. So it means that it's taken several number of years. And mind, the US is more advanced than we are in the business cycle, really. So it's taken several number of years in the US to have this pass through from wages into prices. And so I would expect that if it takes the same number of years, we may be there as well. But it's been inflation is not far from the target in the U.S. Thank you,
Mr. Di Vittorio.
The Federal Reserve started rising rates in the year.
Oh, okay.
The Federal Reserve started rising rates in 2015. The European Central Bank may do so after the summer. The time gap is 4 years. Does the European Central Bank believe that this distance will be reduced, or the divergence of growth between the two economies, US and Europe, is structural? This is first question. The second question is, a European government has attacked the vigilance of the European Central Bank, saying it is impartial. How does the European Central Bank comment?
Thank you. The timing of monetary policy actions in all jurisdictions is dictated by the respective positions, by the positions of the economies in the respective business cycles. Structural differences may make a difference, but structural differences were there before and are going to stay there later. It's hard to understand how they can influence, but certainly they may have an effect. So it's hard to say. It's hard to project these difference in dates to different business, but we have to.
Okay, so it is flipping around there.
We are at the same stage with the labor market, the same degree of tightness everywhere in the Eurozone, because one feature of the Eurozone is its heterogeneity. In some parts of the Eurozone, we have no doubt these parts are at full employment and have been at full employment for a while. So much so that, if anything, the obstacles to higher growth are now to be found in the scarcity of labor, or in the scarcity of skilled labor, or in the capacity of the plant and equipment. But in other parts of the Eurozone, unemployment is still high, significantly high. And so you have slack there, so you have lower wage momentum, you have lower demand, which hampers the pricing capacity of firms, and therefore the pass-through into higher price. So it's heterogeneous, and that's one thing to keep in mind. Now, on various occasions, various governments have attacked both supervision but also monetary policy. All of you can't, certainly remember other instances where the ECB monetary policy was being publicly criticized by prominent
Notice how the big order is at 23 now?
As I said, it's understandable that when things don't go their way, the politicians would protest and say what they want. It's also understandable that the ECB doesn't listen.
Mr. Powell?
Hi, Matthias Pauw, RTL Z. You've spoken at some length about the rising uncertainties. And now one obvious uncertainty is who will succeed you. Is there a sense in the governing council that the process of finding a successor should be expedited?
Well, it's a difficult answer. I'm a little biased. Don't have that sense. Maybe people like me. But I don't have that sense from the governing council. Of course, people know that the mandate is about to end, but we have no say about that. It's decided by other people. Well, I mean, these processes have always been they've always been decided by other people in other fora, and central bankers have no say about that. So we wait for the decisions taken by the European Council, by the Eurogroup. Thank you.
Ms. Boufaki?
Isabella Bufacchi from Sole 24 Ore. I have 2 questions. You did mention a recession a few times and that it's low risk, but I wonder whether you would like to comment on anyway risk we went really close to, or maybe we are into technical recession for Germany and Italy, whether you looked at that in particular, whether you thought that the factors in Germany were mostly temporary, but maybe for Italy they were more deeply rooted. And then you also said that the banks' balance sheets are much stronger. Anyway, market capitalization of major European banks is very low. And there are some, as you said, isolated cases, but troubled cases for banks in Italy and Germany. And recently, the ECB SSM has increased its pressure on requirements for NPL provisioning, and we have now flows and also stocks.
Well, I had a little push there, and now they're falling back
Daniel
into this
Louis
range here.
Also on legacy assets. So would you care to comment on that, given that I see the discussion on TLTROs is not started, but maybe there is an issue not of liquidity, but maybe market access of certain banks. Thank you.
Well, I said they are strong. Banks are stronger in comparison with what they were or how they were at the beginning of the great financial crisis. Of course, banks can be stronger, but if you look at the capital ratios today, are much higher than they were in 2006. But also risk management, controls, the overall banking sector has, partly in response to the regulation, partly in response to their own, a change in their own business practices, is stronger than it was before. Given that, we certainly know that we have, as I mentioned before in a different context, we have cost coverage ratios, which are above in some parts of the Eurozone, are above any comparator. We have NPL stocks, which are high. And that, what you said actually shows the case for a speedy elimination of NPL stocks, because it does strengthen the economies against a recession. It does ensure the people of these countries that a recession doesn't become again a credit crunch, which worsens the recession again, which was the experience in the great financial crisis. So I don't know much about frankly, about the Daniel Nui package, and so these questions you will have to ask to Enria. Maybe he has an Enria package to propose that. But I don't know much about that. Now, on the possibility of recessions in Germany and Italy, I think I've discussed that. Right now, the Governing Council doesn't assess this as a likely possibility. And as I said, likelihood of recessions changes from different parts of the
We really
Eurozone.
haven't seen this
But
22
overall,
half go
in the
bid. I wonder if it
aggregate,
does. What happens to that big order at
there was
23 even?
no sense that the recession was a likely event.
Mr. Bollen?
Hi, Thomas Bollen from Follow the Money. The Dutch Scientific Council for Government Advice in the Netherlands has performed 3-year research into the monetary system, and they concluded that the lack of a digital alternative for cash money is contributing to instability in the financial system, and they advised the foundation of a full reserve bank or giving the public access directly to central bank reserves or access to central bank digital currency. My question is whether
EIA
the foundation of
has seen
such a
US
full
crude
reserve
output
bank is
peaking
possible
at
within the
14.53
current
barrels a day in
regulatory
2031.
framework, and whether the ECB is considering experiments with central bank digital currencies.
The answer to the second question is no. We're not considering experiments in this field. To the first question, there is a vast amount of work that's taking place across different central banks and centered in the BIS, the Bank for International Settlements. But to say that this would lead to a change of this importance anytime soon would be wrong, would be an exaggeration. Actually, rather the opposite is true. It's rather the risks of movements like that, which by the way, I know that in some countries have been asked by the public, and in some countries, not many, very few as a matter of fact, are close to doing something like that. But the studies that have the work that has been done highlights more the risks of an approach like that for monetary policy, for the banking system, for financial stability, than the benefits. But that's a snapshot of how things stand at this point in time.
And the final question to Mrs. Van Leuven at the back.
Yeah, they got to get this over with before the E-mini opens up.
In the Netherlands. Today, new pension cuts have been announced, and I was wondering, what would you like to say to those people who fear their savings due to pension cuts and low interest?
I'm sorry, I'm not in a position to comment on this. Thank you.
Thank you very much.
Is there any other question?
That was the last question.
You can do a second round if you want.
No, that's another.
Oh, then there's one there.
Please.
Well, we can't end with a lame question like that. That's funny.
Julia Wackert from Börsenzeitung.
It is not.
Said in your
They did
remarks
it
that,
pulled.
Steps to strengthen the Eurozone architecture have to substantially be stepped up. But how do you feel the chances of this, given that all the major countries facing so big domestic issues right now?
Actually, the word, if I'm correct, the word "stepped up" was used for
That girl looked
reforms.
really excited to be able to ask a question.
Whether structural reforms or progress in economic and monetary union building, deepening, the pace has slowed down considerably. And the reason, basically, is that these are big, important changes. And therefore, they need the support of the people. And so, I think I said it on another occasion. In both these areas, we've got to be humble. We can design what's the optimal set of measures to take.
Where is he from?
Cases, we made the examples of structural reforms.
I don't want to look like I'm making fun of his accent. I just found it really interesting the way that he said that.
Of implementation of these measures is an entirely
I guess
political
it's
decision.
from
And so I
Italy.
have no
He's from
doubt
Italy.
about the political commitment by our leaders, by our governments, by most of our citizens. You've seen the euro is now
here's the
has an
ES
approval
starting.
rate is highest since its beginning. So I have no doubt about the political
It's kind of threatening a buy there at the beginning, but it didn't go.
Union. But I have no say on its timing.
Treasuries ticked down.
We have 2 minutes left. If there's any further questions.
You get 2 minutes left. What?
I'm sorry.
Mr. McHugh.
Dave McHugh, AP. In case there is a no-deal Brexit, what could the ECB do to help? Can you give a peek in the toolbox or say anything about that?
Well, you know that we've been working with the Bank of England.
So they are
for
getting
several
some
months.
insistent downticks here at 22 now.
We had a working group identifying what the main risk would be to materialize in the financial system, of course. And we identified several areas for action.
The volume in the E-mini is a little low.
Potentially the most important one is the area of centrally cleared derivatives. But then the Commission intervened with a pronouncement basically allowing the UK central clearing, central CCPs, to continue serving EU clients and members for a period, if I'm not mistaken, of 12 months. This is
Okay,
called,
there's a little bit more volume in the
conditional
E-mini.
and temporary and conditional equivalence. So this and the other areas of non-centrally cleared derivatives, insurance contracts, they do present risks, but they can be addressed, and they are being addressed by the private sector. So work has been done in the financial sector to be prepared. Of course, we have to see. I mean, because it's such it's an important event, and its length, also its protracted length of time, also is not benefiting the overall economic climate in UK, but also in the euro area. Thank you.
Thank you very much.
All right. So now that that's through with. So it was interesting that we came up to the 23, and we never got past that, did we? A little bit ticked into 23.5. I don't know if it was just that one or what, but and then we did come back, but they made a higher low than the last swing at 21.5. So this at the moment looks really uncertain, and there's not. For a long time there looked like there was maybe some pressure, and that if we saw a break, that we would see a really big swing. When we did come down, I guess it wasn't really that much, at least not in the 10-year. So I'm thinking that a lot of people are waiting for the news at 7:45 my time. The PMI. Is that what it is? Flash Services PMI? Yes. There's a big order there at 22 now. I'm actually seeing quite a few big orders holding the market up here in the bottom now. So to the earlier question, I didn't really want to interrupt the news conference unless I had something like really interesting or funny to say, but interesting times we are in stock market wise for sure. I find where we are at on a technical basis to be really odd. They're kind of in a seriously unknown spot, Well, there you go. There's another tick up. See, I think the E-mini is gonna do a bunch of. Okay, so there's some bubbles. Like now they are trading it a little bit more aggressively. Now that the ECB conference is over. Yeah, and back above 23 again. The thing is that so the issue I'm having today is that I do want to go short because I'm not so sure that these levels are justified, but we do have to keep in mind that like the Treasuries moved up like this on their own. So like for some reason there is some real concerns about the risks.
And just a heads up, just under 10 minutes time, we'll get the release of the start of some US data. Market manufacturing PMI flash read for January, looking for prints of 53.5 against a prior read of 53.8, with a range between 52.5 and 54.5. Services PMI flash read again for Jan, looking for a read of 54.1 against a prior of 54.4, with a range between 50 and 55.0. For the composite reading, no estimates there, but a prior reading of 54.4.
So, I mean, there's a real possibility that the Treasuries are seeing they're concerned about something, and that eventually the equities are going to reflect it. And I can't really go short right now because we came up there to that 26 and that liquidity showed up below us, and it's at two prices. Like there is some buy pressure in the DOM now. So I don't think that my short really makes a whole lot of sense at the moment, but maybe we come back up a little bit and we can get down. Mary Jan Tolsik, hi, how's it going? And by the way, there's a lot of people watching today, so good morning to y'all. Thank you guys for watching. I'm always, I try to address all the comments, so don't be afraid to be shy, but of course a lot of people do lurk because they're just listening and trading. So then the other thing was, earlier we were talking about why are you trading during the ECB press conference? Well, the thing is that if I see everything's pulling and it's like 3,000s at every price, and this sort of a thing, then yeah, it's usually not a good time to trade. During the press conference, I found that you can get a lot of movement, and so it can be worth it to trade. And as long as I'm seeing a 5 somewhere on the DOM, I think it's okay to trade. The key is just that you've got to know where the spots are, and in that one, we had such a good range here between 23 and 24.5 that I was able to take it 4 times. So, that was really cool. So, I think it's okay to trade during the ECB press conference. I've done it many times. But that's just kind of up to you. There's not necessarily anything wrong with it because, like I said, you get a lot of movement, so you can scalp a little bit in there. So we're just talking. Marjan says, remember you're talking about market cycles yesterday. Mind if I ask you a few questions about it? Any questions? You should just ask the question. Okay, that big order ticked up at 22.5. You see that? Now the E-mini is selling pretty hard. Maybe I could have gone long on that when I saw that happen, but it was a little bit in opposition of my larger guy, and I guess the risk reward on that was, I think it's best to stay out until the news for me, because I'm not too sure about the larger trend now. We're going to see it bust out the top here. Or are we going to see some big absorption somewhere? I'm going to stay on my toes. Yeah. Hey, thank you for tuning in, Delman. We'll hope to see you again. Oh yeah, so people were asking about Bitcoin. I don't know if you guys are still there, but you notice that, can you see the Bitcoin chart down here in the futures? Notice the big swing down in the futures? I think that they may have switched contracts. I have to go check. But it looks like some of what we're seeing is related to the futures contracts switching over now. And price has become a little bit more volatile, which I'm not so sure is a good thing. The more that it's moving around down here, I think the easier it is for the sellers to try and make a push and push it below 3,000, you know? It just gives them a lot of wiggle room to try and push things. Okay, so here they go. E-mini making new lows now. Yeah. Treasuries haven't, okay, they did just tick there into a new high, but it was slow. But they're putting pressure on at 24.5. I think that they probably will tick up. I don't know about past that. The question in my mind is how much are they going to absorb on the top side? So there's a lot of selling there at 13.5 in the 5-year. So I kind of want to think maybe if I get one at is it possible to quantify market cycles, as in, is there a definite number of market cycles? How many are there in a given year? Do they repeat? So the thing is I think that there's different cycles, right, that can be going on at the same time, right? So one cycle that is quite well documented, and you can find academic papers on this going all the way back to the 1920s, is that there tends to be a peak in speculation around interest rates around the beginning of the year. So from about September to March.
The US manufacturing PMI read for January, looking for reading of 53.5. Services look for reading of 54.1. And for the composite, no estimates, but a prior of 54.4.
From about now until March, or sorry, from about September until March. So it's like from September until January, it's increasing, and then from January to March, it's decreasing, and then that cycle like finishes, and then it goes into the summer cycle. So once they get into start trading the June contract, volatility changes significantly, right? So that's one that we know exists. Okay. But there are other cycles that
keeping an eye on
are independent of that.
Chatter on social media via Vague. So Samsung could be interested in the company. Apparently Infineon and Excelink were also mentioned as possible targets for Samsung.
So, for instance, there's been this cycle that we've been going through over and over again ever since the trade war news came out, right? We'll have a big period of concern, and then it'll kind of come back, and everybody thinks that everything's going to be fine, and the impact isn't so bad, and then another period of concern, and we've gone through, like, this is now like the third up move on it, and it sounds like we might have another push down, or at least start kind of switching around to maybe make another push down. You know, that was like a cycle based on the news that's going on. There's a metagame cycle with the way that the robots are adjusting themselves. You know, there's just so many.
Just under a minute.
And I think the more that you can see, and if you can find an edge where that cycle affects your edge and you can adjust to it, then you're going to be in a better off spot for sure. But ultimately, it generally comes down to whether there's going to be an increase in volatility in treasuries or not. You know, the more the treasuries are moving, the easier it is for me, at least, to trade. So, okay, this 25.5 that's showing up here, only 7 traded into it, and there's a 26 at 26 even. There's 73 up there now, so that's a pretty big level slam. If I get some movement,
10 seconds.
Gotta be careful here, but if I see something, I may take this short.
It's Manufacturing 54.9, services 54.2, composite 54.5. So much stronger readings
So that
there
did
for the
not go the way
manufacturing
that
PMI
it
read
was
for the
supposed to. It
US.
was supposed to be a stop
54.9
limit.
came in beating estimates of 53.5. Services came in at
Okay.
54.2, beating estimates of 54.1, with a composite in at 54.5 versus last time round's 54.4.
Interesting. Yeah, but they did like that number, especially the E-mini. Well, I'm just mad that I didn't get the price that I was supposed to.
The US
Because that was a
manufacturing
stop
sector
limit.
flash PMI output index for Jan at 55.9 versus the final December reading of 54.3. Meanwhile, the flash PMI employment index for Jan at 54.2 versus final December read of 52.7.
Hmm. They're having a little bit of trouble at 23, but it's not like they're like pushing back per se. I'm not so sure that that one's like a reversal or like the end of it, but it sure isn't good that I've got one tick and it's not continuing through. Okay. And down ticket wasn't super great though. A good absorption there at 23. Okay. E-mini is still kind of pushing and isn't certain. They didn't beat out that pivot from during the press conference. I think we might move a little bit higher. I think that there's going to be some incentive to try and bust that through that. Probably even to 2642. I think. Okay, there are some big orders below us now though that we got to be worried about. They've been having trouble with big orders for sure. Okay. So that looks like a little bit of luring there. Yeah, see, it pulled really easy, but 24 still traded there. So it looks to me like that the more sneaky traders are still trying to get short. Kind of a tough call though. That one is always a little, you never know. You never know if it's going to be there, and then when it happens, it doesn't always follow through. Always a real sneaky trade, but I do think that there might be some guys trying to get short here. Okay, so it was 54.9 versus 53.5. Wasn't massively better, but it was still a pretty good number. Okay, they did get through the iceberg. Oh, and then they ticked it back down. They're going to attack this 23 though. That's a lot of pressure there. It's a lot of pushback. Gonna get rid of that order because I'm not as sure now. In fact, I think I'm actually going to bail on this if I can. Yeah. And see if I can get it a little bit higher. Okay, right here. I guess that was dumb. Look at the market delta on ZN. Yeah, well, there was 8K sold, huh? Yeah. Okay. Yeah, that's not... Okay. I think I need to sit on my hands a little bit. I think I'm getting a little impulsive here. I was focused for such a long time, it's probably need to take a...
Block buy.
A little bit of it. Okay, there you go. Block buy. Look at that. Wow. Where was it at? 24.5.
Just a heads up, just under 10 minutes time, get the release of the US leading index change month-on-month for December. Looking for a reading of minus spot 1% against a prior read of spot 2%, with the range between minus spot 2 and spot 3%.
I don't feel like the sellers really had their say in the E-mini, did they? Okay. So there's still a buy sweep over there in the E-mini. That's interesting. That 24 is pulling. And it's absorbing. It could be a lure. And that held that offer really well. So starting to look really negative to me. So I think at this point, it's not that I don't think that there's an opportunity. I'm questioning myself a little bit. So that 24.5 is, I'm a little suspicious about. Definitely a big guy that bought there that is underwater at the moment. Yep, and they hit it at 23.5. There's absorption. This is a key area. I think, like, my read at the moment is that there's some real buying pressure, but that buying pressure is not resulting in new highs yet. And so if that buy pressure subsides, we could finally get a stronger down move. It's probably going to be very dependent on the E-mini. And right now in the E-mini, it just looks like a meat grinder to me. Yeah, there they went offer. Still kind of getting this thing where they're taking their position in this range here. Okay, there's the E-mini took another little tick down. I don't know. It's interesting. It's a really not a... I don't see anybody being too insistent here in the E-mini at the moment. It's kind of hard to see how that would be, though, like... Cool. Okay, they did tick up. Well, the E-mini took a dive there. Okay. So that's the most they can do there? Notice, though, that Treasuries didn't really move off of that. And it's higher than the last low, and there's no bubble yet, so they might continue through for a bit.
And just a heads up, just under 3 minutes time till the US leading index change month-to-month read for December, looking for prints of minus 0.1%.
The CB leading index is not a significant news release to worry about because most of the data that is based on is already out. Do you always look for ES to go in an opposite direction before taking a position in ZN? I wouldn't necessarily say always, but I definitely want to make sure that they are in agreement in some way. You know, like if I see a short here, I need to make sure that I'm seeing a long in the E-mini, or not. Rather, if I see a short here, I better not be seeing a short in the E-mini, right? I'm not sure if you've tried Jigsaw's load levels yet, but I set it up for a spreadsheet for ES last night, and it's pretty great. Oh, you know, I totally forgot about that. In fact, I don't think I've updated my Jigsaw yet, but I really want to make an indicator for NinjaTrader that will export the levels for me to do that, because I do think that would be nice. I haven't messed with it yet. See, that down tick felt significant. Like, I don't know. When I watched it, I was like, oh, maybe the chance is gone.
1 minute.
But then it was only a tick, and it's not actually, when I look at the volume and everything, it's not actually something significant. So that may just be me, you know, wanting to be short and not wanting to miss it. The E-minis might still try and sell again, is the thing. Yeah, I just, the thing that I want to be careful about saying is that I don't think you should ever take a trade because you think that the E-mini is going to do something. You know what I mean? If you think that the E-mini is going to do something, you should trade the E-mini. Because when you get a correlation trade like that, it almost always disappoints in the treasuries. It never goes as far as you think it's going to go. Never. Okay.
Apparently Italy is close to completing preparation process for US dollar bond issue according to a Treasury source, and in line with expectations, the leading index minus 0.1%.
Okay. So yeah, don't try and trade the correlation. Just try and make sure that the correlation doesn't invalidate your trade. Is all. I would definitely watch it though, because the E-mini is so much a factor as to why people trade this that you really can't ignore it, in my opinion. Okay. So some balance at 24.5. Hmm. There's some big bids below us. I wonder how this is going to turn out. It looks like the momentum is flipping now. Yeah. Now they're consolidating at 23. The E-mini looks good for the moment. Yes, up to 41. Yeah. Yeah, I really thought that they were going to beat out that 42 area when they made that first initial push, and I'm kind of surprised that we came back. But we've come back and they made a higher low, so I didn't see absorption at the bottom. If there was absorption at the bottom, then I would definitely be like super gung-ho about it. At the moment, though, it looks to me like there was a lot of selling on there and that they're not making progress. I mean, you're getting a lot of icebergs in the 5-year here. So that doesn't really help. It kind of makes things a lot harder to read. And ticking down here at 12.75, but not holding it. A little bit of a volume node here at 23 or 35 in the E-mini. Yeah. Okay, that was a little bit of a sell sweep actually, or maybe a stop run. Okay. Now they're selling it. Not going to offer. 5-year went. 30-year went. Okay, now they did it. I mean, that looks good in the 30-year. Yeah, there you go. Okay, so we need to be careful. 22.5 is the open. I guess not really going either. And a big tick when it ticked back up. Well, what do you think of taking trades based on cumulative delta and large trade circles? So I definitely watch for the large trade circles, and I definitely watch for changes in the cumulative delta. But I don't believe... Well, there you go. I guess I got out too early. I thought I was going to be able to get in again, but nope. My problem is I don't know about 22.5 is the open, so now I can't be sure what it's going to do. Anyways, the problem with cumulative delta is that cumulative delta tends to tell you that there's a trade opportunity, but it doesn't necessarily tell you which way it's going to go. I think that when traders first start looking at it, they believe that it's a signal, and it's like, price made a new high, but cumulative delta didn't. I should go short here. And I don't think that that's the case, because very often that means that there's just more people left to buy, and it's going to push another step forward, and you're going to see a stop run. Right? I think they're good if an area is out of volume, if its support and resistance is combined with it. Right. So the point is that you have to combine it with something else, for sure. Like if I see a big change in cumulative delta, and there's an iceberg up at the top, and it's in line with where I believe that there's going to be some resistance, and I'm seeing that the E-mini appears to be kind of doing the same thing, or at the very least is not contradicting that Treasuries might reverse, then I think for sure you take it. Or I just, look, but I ultimately it always comes down to me too. I also have to see something in the order flow, like the way that the orders tick and the prices that seem to matter, have to all be in line, and the risk reward has to all be in line for sure, so for me it's a big combination of factors, but the cumulative delta on its own tells you almost nothing about what the direction is going to be on its own. That's a mistake that I think people make with cumulative delta. See, the E-mini's moved up, and I'm liking it, but it just did not move as far as I thought. Even if I had held that trade, I'd only be at +2. So this is kind of really just slow action. You got to be careful, because if they break the overnight high, the chances of them getting below the regular session open are low, like 30-40%. That's why they're reluctant to sell this price. And I'm sure that if they do decide to really take it, you're still going to see a lot of profit taking on it too. Okay, well, 1645 to trade it is not that much.
Agreement between US North Korea on date for next summit could be announced very soon.
See, nobody wants to pile on it right there yet. They really probably need to see the E-mini break a new high.
Leave for North Korea before concrete steps towards denuclearization.
They could do it though. Yeah, that 22 could pull. We could see a move back to the VWAP. Seeing the possibility, I just know that this spot is not the best probabilistically speaking. You read that stat where the E-mini has a 95% chance to break the overnight high or the overnight low? Yes, I've done that myself. Tested that myself, and it's similar in Treasuries. It's not like 95% chance, but it's still like a 60% chance that they're going to break the overnight high and low. And whether or not they do it is one of those things that you can kind of use to tell which cycle you're in, because they're actually like, so the thing that I use to do the stats, it does a graph, so it shows me what the percentage chance of that thing happening, how it has changed over time, and you can see that over the summer that they're less likely to do it. It changes a little bit during that time period. They broke the overnight high today, though, but it was like, you know, it was mostly because we just happened to be there, and then there was the volatile news and everything like that, and that's why we wouldn't hit new highs. It didn't seem to me like it was because somebody really wanted to push it up there, or some big institution was buying it. You know what I mean? Okay, 22.5 is seeing a little bit more pressure now. Or it was until we ticked back up there. Ooh, now 22 is putting it on. And they put it on and then they pulled it. How did you build that graph from stats? So if you're a futures.io elite member, you can go to their elite download section, and there's an indicator in there called Stat Suite for NinjaTrader 8. And that's how I did it. You know, and you basically, at the end of, I do intraday bars, but then at the end of every day, I just recalculate it. You know, okay, this is what happened that day. Here's what the percentage is, and that's the plot point for the graph, and then do it the next day. Yeah. There you go. I also posted it in the Discord yesterday, the zip file, if you're not on futures.io. You have to scroll. You'll have to scroll up through a whole day's worth of stuff, or just search for stats. See, the E-mini has been buying. They may yet make another push, but it's been slow, hasn't it? The concern I have is if they decide to buy here and they're going gangbusters, it's not in a spot that I can take it here, so. Okay. So there's the new high, and they did tick down, and there is the big order showing up there at 22.5 again.
In energy news, fuel oil stocks at Europe's ARA hub falling to 1.302 million tons from the prior week's 1.427 million tons.
Okay. I can take this one because I know that the probability of them touching the VWAP now is very high. Okay, that the E-mini hasn't quite made a new high, but the way that they shot up there, I think there's pretty likely. Big bubble there. So this is kind of a really good example of what we were talking about earlier, isn't it? We made a new high. We haven't made a new high in cumulative delta, and there's a bubble there. So does that mean you should go short here? I don't think so. Because there's a really good chance, especially with the momentum, that there is just more people to get stopped out. And so I think that just based off of the momentum alone, there's a good chance that they're going to go up and make a new high. Well, maybe we see something that changes that. Let's see, they made another push, and that one was pretty successful too. Okay. What if cumulative delta was making a new high and the blue? Well, so if price makes a new high and cumulative delta makes a new high, that's not a divergence per se, right? That's just cumulative delta is confirming what price did. It's more interesting when there's a divergence between them. You know, those four situations. Price makes a new high, cumulative delta doesn't. Price makes a new high, cumulative delta goes way, I have to draw them out in my head, and I'm too lazy to do that right now, but there's four scenarios where you can get a divergence between those two things, right? So yeah, you can't necessarily tell it, because anytime that happens, there's always two possibilities that can come out of it. Right? So here, one probability is that there is a lot of market selling up here, and so they're going to eventually push it lower. I didn't see that in the DOM, but that's a possibility. And the other possibility is there are just a lot of people short down from here that are like really hanging on for dear life, and they're going to go and get stopped out. Right? So what does it tell us? It tells us there's a trade here somewhere, right? It's not going to stay in this spot for sure. So anytime you get a divergence, that means there's a lot of people that have taken positions. And so if it moves too much to one side or the other, people are going to have their stops hit eventually. That's why it tells us that there's an opportunity. But it doesn't tell us if we're going to make a new high or if we're going to go back to 2640. But is it a good buy signal if the blue circle appears in that scenario as well? So you're talking about a trade that would essentially be like a trend continuation, and I'm not. The thing is that what you will see on a trend is you will see like a bubble. So we had this move up, you get the bubble, and then it will go like that, right? I think that's what you're kind of talking about. And I don't know if you can tell that really from the cumulative delta in the bubble.
Just under 10 minutes time, bottom of the hour, get the release of the weekly EIA working nat gas storage change numbers. Looking for a draw of 158 BCF against last week's draw of 81 BCF, with a range between a draw of 166 BCF and a draw of 130 BCF.
I would pay more attention to the price action in this area.
The weekly Salt Dome Cavern Nat Gas stocks reading as well, where last time round we saw a build of 1 BCF.
So the question is going to be, are there people aggressively selling it here now. Doesn't look like it. It looks like the buyers are able to buy it back up pretty easily. So this could be I mean, I'm thinking that we're going to go and make that high. I really think so. But, you know, I got to be careful. If I see people selling, even if there's buyers are trying to hold it there, that kind of is where I get concerned, you know? When you make a new high and all of a sudden buyers don't want it and sellers decide that this is a good opportunity to try and reverse. I think price action is a really key component on continuation trades. But continuation trades, like, that's the hardest one to call. You know what I'm saying? You know, like think about a trend day, you know? Trend day where it moves in one direction all day. And what causes trend days? Well, people are shorting it over and over and over again because they think that it's done, and they're getting blown out over and over and over again, right? That's what causes a trend day. And why does that happen? Because the scalpers keep being wrong about where it's going to stop, you know? So that alone tells you it's a tough trade. The only one that I think is harder is when you have a real move and a pullback. Like a true pullback. And this does not look like a true pullback to me. Okay. So they did touch the 2642. So that reduces our chances. I mean, it doesn't look quite as good, but it's still within like the acceptable margin, I think. So if we get like, especially if we get below 2639, then I'm gonna be like, 1, 2, 3, 4, 5, 6, 7, 8, 9. So I'm having another edge coming into play here that is in contradiction to my current position. If they don't make it on this next push, I may have to bail. Okay. Okay, so there was a push and then a stronger push to the buy side. I don't know if those are stop runs or sweeps, but ooh, it was kind of fun. Treasury's not reacting to it though. Okay, now they are. No, they ticked down, but they didn't. Okay. Yeah, okay, that seems to be what we should be seeing. I'm going to watch and see how it turns out, but I think that the chances are that if they sell through 21, that they're going to do it all at once, and then I'm going to regret having this order here at 21. I think that KS was talking about, I forget his name. There's a YouTube channel that people have been telling me about that he's trading order flow with the E-mini, but I haven't had the time to go and watch him yet. It's kind of like on the video list to watch. I mean, it's looking okay, but really should not be so hard to get below 21. It's honestly not normal for it to be this difficult to move close to the VWAP. Okay. I guess I could also say it took quite a bit of drama for them to get to this 2644 area. And it wasn't very far, was it? It was like 2 points. Yeah, McKees or Sozy. That's right. I mean, I think one of the key things you got to keep in mind with that stuff, talking about the bubbles and the cumulative delta and everything, is that that's probably is what he's looking at, and it probably is a good edge for him. I'm just saying, be really careful about making the conclusion that it's just that thing,
time till the weekly
right?
Nat gas storage change number. Reminder: we're looking for a draw of 158 BCF, and also get the weekly salt dome print. Last week round seeing a build of 1 BCF.
There can be so many other things that a trader sees.
Geopolitics. Just a heads up: the U.S. Secretary of State Pompeo is to speak at 16:15 GMT on Fox regarding Venezuela.
Okay, interesting. There could be so many other things that that trader is looking at that he might not even be consciously aware of, you know? Like price action in a situation like this is really key. Like when they move up versus when they move down, which one is faster? Who is doing a better job at pushing price in their direction? Yeah, Smash Up It says the bubbles are only half the picture. Yeah. I mean, the bubbles tell you there's an imbalance. They don't, on their own, tell you which way price is going to go. Price action, in my opinion, it combined with the way that so there was a little bit more aggressive push up there. You know, that tells me that buyers are in control and that they're getting a little bit anxious about buying it because they think that it's going to go. It didn't go, but buyers seem to be in charge right now, you know? Though that sort of a thing I think is important. The way that the level 2 reacts kind of confirms it for you.
1 minute.
Okay, so there was the stop run. So I was right in the end. I want to say right, but the trade worked. Okay. So it's behaving okay for having made a new high there. I should be getting the fill a lot more easily. I don't know what the deal is here with that. Okay. Good deal. Well, I should have done a lot better today than I did. These first 2 trades were a little... that didn't need to happen.
A draw of 163 BCF, draw of 163 BCF for the weekly EIA Nat gas storage change. It's a larger than expected draw of 158 BCF. Salt Dome Cavern Nat gas stocks coming in as a draw of 8 BCF. Draw of 8 BCF there for the Salt Dome stocks.
Yeah. But it's always, any time that I'm looking at one thing, just always think when I see one thing, and that almost all of these order flow indicators are indicating imbalance of some sort. All right? Anytime you see that, it still doesn't, there's still 2 possible or more outcomes out of that. Right? Yeah. I'm not saying they're the full picture. So here we have a bubble. Okay. So there's two possible outcomes from this now, in my view. One is, so first of all, in the E-mini, if you get a bubble like that, you can probably fade it for at least a point. Probably. I'm not so sure that that's a trade that I would recommend taking regularly, because when you're wrong, you're going to be really wrong, and it may be way more than what you would make off of it, because it's not a whole lot to make. But the chances are probably it's going to come back a little bit, at least a point. From there, you don't know if it's going to pop up and make a new high like it did there, or if they're going to do a full-on reversal. Two scenarios, right? Contextually, though, for that trade, just to reiterate why I took it, the first thing was I was looking short anyways, and I saw a strong tick down. I saw the E-mini making a really strong push towards the high. I saw that the buyers were still in control here. I saw that they were stacking the offers here. And I know that when we get that close to the VWAP, there's a really, really good chance that they touch it. And that was a big part of it too. Right? There's so many little things all in correlation. When they all come in convergence, that's when I think that it makes a good trade. You could fade the ES versus the high of the day here. 9 EMA target on 5-minute chart. Yeah, okay. So that's where I'm saying that I can definitely see that trade, and the E-mini definitely has a tendency to do that. The question would just be, like, you would have to do that for a long period of time, probably at least 3 months, tracking just that one trade, and then see how well it turns out for you. Because the problem with that trade is that the 1 in 16 times that you're wrong, they're going to run for like 10 points in the E-mini, and you're going to get so much slippage on it, you know, it can be ugly. So you would have to show that you control the losses on that strategy well enough that it's still profitable. But it might be good. I know there was this guy on Futures IO that has the
next contemplating a private placement.
I forget what the name of it is, but there's a thread that is like by far the most popular thread there in the Elite Forum, and that's kind of the type of trade that he kind of takes a look at. Anyways, what would you recommend for a beginner to look at? So if you want to try trading the way that I'm trading, my recommendation is to go and order the No BS Day Trading Beginner Course.
That doesn't seem to be the UK retailer next there.
It's like $70. I think it's probably the best value on the market for education. I don't think that there's anything else out there that really tells you what that book does. And yeah, watch the DOM for a month without the graph. There you go. Yeah. I mean, there really is something to it. Like, I feel like I do a pretty good job of, I'm always going through my head and I'm saying, okay, this happened. Why did that happen? What are the possible explanations? There's usually multiple explanations, but what's an explanation for what happened there? Well, I think in that case, there was some people going short and they got stopped out. I think that's what they happened. I think that's what happened in that case, right? You watch the DOM long enough, you're going to notice things. Now, the problem is that we're really good at seeing patterns where they don't exist. Okay, that was a pretty strong sell impulse, but it didn't make a new low in cumulative delta. It could be a pullback. We may form a head and shoulders pattern here. That could be interesting. Yeah. I think here where we had this white order before 2642. So one of the things that I tend to do is I always look at where those resistance points are, and if we get there, I've got to be seeing some real pressure, like some real reason for them to be continuing through to hold it. So for me, we came down to here and now it's kind of slowed down again. I take it off. But anyways, we're really good at seeing patterns where they don't really exist. And the market changes a lot. And so you might see something and it really was a real thing and then it doesn't last for very long. Right? I think that's what happens to most traders is, like TKO was saying, you find patterns, did you write them down? What happened to me was I see a pattern. I say, hey, this is a really good trade. I track it in my spreadsheet for 20 trades. It's good. Okay. So I'm going to start trading this thing. And then it works well for another couple of weeks. And then after a month, it completely disappears. Completely disappears. Or it flips on you and now all of a sudden it's like the opposite and it loses you money every time. So then at that point, was it just random noise or was it actually, a thing? Right? So how do you overcome that? Well, I think that there's two parts that you have to consider when you're coming up with a strategy like that. The first one is that I think it's always best that you need to have some sort of fundamental explanation for why the behavior occurs. Okay. One of the so I'll use an example. The one that I've tested the most is if you see a really strong bid on both sides, like the bid is really high and the offer is really high and they're both unusually high, you're very likely to get filled on both sides. And if you take into account the current momentum and avoid pivot points when you get that, it's like an 80% trade. Get filled on both sides. Okay. Well, why does that happen? Well, I think that my fundamental explanation is that you've come into a point where two big players have met each other. And so now they're going to trade into each other at that point. They're going to, this guy's going to sell, this guy's going to buy. And that's why you have almost like 80% chance of being right. And you can take that trade and you can take one tick and you can risk two ticks. Yeah, I had an 84% win rate with a 2-to-1 reward risk. It worked for 6 months. And then in 2019, it failed every single time. Yes. So that's the first thing, is what's the fundamental reason behind why that edge works? And then the second question is, how does the meta and the cycles affect that? If it's based on I see a big block buy order and I say I'm always going to buy that. When I first saw that, it was like, you can always buy that. But then everybody saw it. It was so obvious. Everybody saw it. And now what you'll see is that any time that there's a block buy, they're almost always start fighting him. You notice there was that big block buy there at 24.5 and they started fighting him. And I don't think that we ever really got past that after that. Yeah. They ticked a few into 25 and that was it. Sometimes they do it and sometimes they don't. So now all of a sudden, is that really a reliable edge because of the meta games that people play? Not really. So then you really have to start putting the thing into context now. If you understand the way that the market works and you properly understand the context, then you can sit down and look at your edge and kind of make a determination as to whether or not your edge is going to work in this spot or not. So, I think that's where day traders, that's where new traders get screwed up, is you test something for a month and then you think it should always work and you just keep doing it until it blows out your account. And the truth is that the market changes so much. You really have to have more of a greater understanding of the market to be able to adjust to the situation, I think. There's either that. I mean, you can either do that the discretionary way, or if you're going to do it the system way, then you have to have a lot of systems, right? Like these guys that do algorithmic trading, like retail traders that do algorithmic trading, they don't just have like one algorithm that makes them all of their money. They have like 5 to 10 algorithms that all have a little bit of edge, and having all of those smooths out the equity curve so that when they don't know why that trade doesn't always work, or a way to tell when it's not going to work, but it's okay because when this one doesn't work, this one does work, and so it smooths out your equity curve like that. I used split profile on Jigsaw and waited for one side to crush the other, like 20,000 buys versus 4,000 sells. Yeah. And then another thing that I have to say is that any signal that you're looking at, if it's based on like a big number, I'd be careful about that trade. Anything that everybody's going to notice, if there's a big iceberg at the top, anybody that really knows the market, all of the institutional traders know that that's there. They all see it, right? More that people see it, the higher the chance that somebody's going to fuck with it, right? So you got to be careful about things that are based on big numbers. The better edges, I think, are the ones that are in places that are really, really unclear, and they give you a high probability of getting something. Something super subtle that most people won't notice or care. Like one of the ones that I do is if on my one range chart, if we've been in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. So if we have an 11 tick zipper and they are not at a like critical area like a high of the day or the VWAP. Here it was the VWAP, so I don't think that this one really counts, but even then you can usually take this long for at least 3 ticks. Now if I told an institutional trader that, he's not going to care, right? He's going to be like, well, we have to sell it, so I would get out of the way. You know what I'm saying? So that one's been a pretty good edge for me. But yeah, it goes back and forth too. It like fails a bunch of times in a row, and then all of a sudden it'll go back to being really good. I always wonder, like, you talk about that on stream, there's 20 people watching, if somebody would go, okay, I'm going to watch that, and next time I'm just going to really try and push it for a continuation. Just to mess with Seth. That may happen. That may have happened at some point. I don't know. But that's why we remain flexible. Like, part of it is like your edge. So here's another thought, is like you want your edge to be flexible enough that everybody in the market could know about it and you could still be profitable. So now the E-mini is showing a head and shoulders pattern. I'm wondering if they're going to go down or not. But, yeah, this is, again, where I'm saying, like, yeah, there is a higher probability of a pivot, or not a pivot, a swing. Let's say there's a higher probability of a swing or a reversal where you see the bubbles in the E-mini. 100% totally, right? You got to be careful with that trade, because that's one of the ones where when you're wrong, you're really, really wrong, right? I think that's the other one that really screws people up at the beginning, is that they say, okay, most of the time that I see this thing, it goes like this. And so they start taking it, and eventually they find that, so you ever seen this guy? He talks about the stages of a trader. He's like, at very first, what will happen is you'll make little wins, and then you go down. And you make little wins, and then you go down. That's that kind of a trade. And then eventually you get a couple of little wins, and then down like that, and you kind of go like this. I think you go through a period like that. Yeah, you can't trade every bubble for a reversal, for sure. You could make a point on them, for sure. But that's where I'm saying, if you're only taking a point, and that depends on the slippage for you then at that point. Because if you're only taking let's say 2 points.
Talks to settle the French tax case.
2 points, and your stop is on the other side of the high at 1 point away, but then your slippage is 3 points, well, then you would have to be right more than 80% of the time for that to be profitable, I think. No. I'd have to do the math, but I think it would be about 80%. Yeah, anyways. Then eventually you want to get to a point where you have lots of little wins, and then a big win, and then just little losses when you go down, right? I think that's the way that's a more positive equity curve, is like, generally speaking, you're going to go like this, but then every once in a while you catch a big one, right? And so you actually end up performing more like this. That's kind of, I don't know. I don't know where I was going with that, but I'm just kind of yapping now because I enjoy talking to you guys. If you don't have room for at least a 3 tick target, it's not worth it. My risk was only 1.5 tick. Well, okay. I was talking points, so I was talking like it's going to go 4 to 8 ticks. On the E-mini, that's super small. So on that one, you'd really have to show me stats on that, because, man, I'm pretty sure that the slippage in the E-mini is more than 3 ticks. So some of those stop runs I've seen go 8 to 16 ticks, right? You can get really screwed on that sort of one. So it would really have to,
French Budget Minister Darmanin mulls leaving the government, according to Les Echos. Let's repeat, the French Budget Minister mulling leaving the government, according to Les Echos.
Okay, points. He meant points, not ticks. So you think that if you can't get a 3-point target, it's not worth it? Yeah, let's not say points. So here's the thing. I don't know how. So here's my question: is how long have you been doing that for, and how long have you been trading overall? I need to generate my charts here while we're. It's almost time for me to go. And my biggest flaw
Stands
is
up, and just under 10
perfectionism.
minutes time we will get the release of the weekly crude EIA numbers. Looking at the estimates ahead of that, for crude we're looking for a draw of 0.75 million with a range between a draw of 2.8 million and a build of 6.1 million. For distillates we're looking for a build of 0.9 million against last week's build of 2.967 million.
And turn him off. I don't care about the distillates. Yeah, so here's a question for you, Marjan, if I can get in your head a little bit. Do you, what kind of hobbies do you do in your free time? What do you like to do with your free time? Do you like to do things where you get involved with other people and maybe it's competitive, or there's some sort of like social status that could be derived from your hobby? Or are you more of a person that's like, you have that one thing that you do, and it might even be like really simple and repetitive thing, but when you get home, the way that you want to relax is to just do that thing. Like there's that one video game that you've just been playing forever, or like a lot of women, they'll cross stitch, that sort of a thing. What do you do with your free time? Trading is my one thing, and I find my peace looking at charts. Okay. So the reason behind the question is a question of what is kind of like your neurological profile, right? So it sounds to me like you are kind of more of the serotonin type profile, which means that on aggregate, your brain tends to respond more positively to serotonin than it does other neurotransmitters such as norepinephrine and dopamine. You may be the norepinephrine type, but the norepinephrine type, which is kind of like me, is more likely to respond to praise from other people, right? That kind of person can become a perfectionist because they put so much pressure on themselves, and like myself, and then when things aren't going their way, the focus just completely falls apart. I don't know, for those of you, most of you guys are new, but I'm sure for some of you guys that are older, you've definitely seen me do that, right? I did that 2 days ago, right? It's like you just completely lose the focus and you just completely fall apart. That's kind of more me. But the other side is if you're the more of the serotonin person, that kind of person tends to be more right about praises of them. So maybe that is you. Okay. So if that is you, then the thing that is going to keep you in it is what drives you is the reward, right? Whether it's the social reward or the tick up knowing that you made money, or even if it's just saying to yourself, if I do this X thing right, then I'm going to give myself this. And the key is to give yourself little rewards that you're going to consistently hit to keep you in it, right? So that you don't get into that tilty state, right? Or if you do get into your tilty state, that's how you get out, is you just got to take those little wins, because it's always a confidence thing. That's my problem, or our problem, if that's you, is you'll lose the confidence and then you just fall apart. Small rewards for that neurological profile, right? If you're more of the serotonin type, which you may have a little bit of that in you too, that kind of neurological profile is kind of driven more by avoiding harm, right? So that person is going to do better with a strategy that is very tedious and involves very little risk, right? Like this is the guy that he's going to find some sort of market arbitrage sort of a thing, and that's how he's going to trade, right? And so for that person, the problem that they will get is that because they're all about avoiding harm, if the harm comes to you, okay, Marjan says that he thinks I read him correctly. Okay, well, for this other neurological type, because I mean you might have multiple types, but the serotonin thing is like when the harm comes, it just feels so awful. It's like my wife is like this. It can almost like make them depressed, you know. Like that's the thing that the serotonin person is kind of fighting is just this constant feeling like they could easily fall into depression, right? And the key for that person is consistency. That is, they have their thing, their skill, and they are good at executing that over and over and over and over again. And you go back and you do that thing that you've been executing over and over and over again, and that's how you build up the serotonin that you need to be able to focus into the trade again, right? These are the people that, like I was saying, like women, like a lot of women, they like to cross stitch or knit, and they can just do that for hours and hours. Like honestly, to me, sitting and knitting a sweater and just doing that one motion for hours on end just seems like the most boring thing in the world to me, right? But some people really, really, really enjoy that, right? And that's how they get into it, right? So that's the one. And then the third one is the dopamine type. So this one is a little difficult in trading because the dopamine type is the person that is driven by novelty. They're often driven to trading because of the rush that they get from winning and losing, right? This kind of person, if you're losing focus, that's the kind of person that I would say go and do something else for a little bit. Like look at a different instrument, or because it's a variety for that person that really drives them. I haven't talked to anybody like that in a while though. So did you read this in a book somewhere? So I was first turned on to this idea from a article on a exercise website called T Nation. The article was called, just search T Nation neurotypes. And he talks about that. And then I think he has a couple of references. Once I was turned on to that idea, since then I've read a lot of literature about how different neurotransmitters affect you, and so a lot of it is a little bit me. Yeah. So take it. You know, what I'm saying is not like 100% scientific fact in terms of like they've done a study and they've shown that if you do X thing, that this will make you better trader, sort of a thing. This is kind of more of a based on what we know about neurotypes, you can do this sort of a thing, and we've done it with people and we've seen that it's successful. But in the end, it is a model, like a gross oversimplification of how your brain works that we've just found has been helpful to traders. Yeah. Anyways, I'm glad you enjoyed that. I don't know how I got in on that tangent, but that's interesting. See, you're probably a little bit of both. Yeah. Anyways, so back to the other thing on Mario's trade. Yeah, I just have to say, you were saying if you don't have at least room for a 3-tick target, because I can recall some market periods, kind of, you know, like maybe last April, for instance, maybe between when we had recovered and we were making new highs and stuff, there was this time period where the market didn't really move very much. And if you were saying to yourself, I have to be able to get at least 3 points to be able to take this, you probably didn't trade for like weeks and weeks. So I wouldn't say 3 ticks. What I would look at is I would look at the average true range for the time period that you plan on holding a trade. So if you don't want to hold a trade more than 5 minutes, then I would look at the average true range of 5 minutes. And that tells you what your trade is going to be in. So then you could say, okay, I don't want to take this trade unless I'm going to get the average true range. Because that's what I do. In the E-mini, you might be able to say, I don't want to take this trade unless I can get 2 or 3 times the average true range, right? Because if you've gone beyond the average true range for your period, then that means that you've picked up more than just noise. You've picked up some sort of a trend, right? So I wouldn't look at it in points, but that's all I was going to say to that. So that's why I was kind of wondering how long you've been trading, because you're going to have to adjust that over time. And if you've only been trading since September, then you're going to have a really skewed idea of how far the E-mini will actually go typically. Because we've been really lucky lately in terms of movement. and then it comes back to what's the numbers, you know? Your average win times the percentage of times that it happens minus your average loss times the percentage of time that happens. And all I'm saying is you got to be careful with the really small scalps. That sort of a thing you can kind of get away with in Treasuries, like I do. But in the E-mini, the slippage is so much that might make that ultimately unprofitable if you aren't good enough at managing the risk. So it just comes down to the stats. It can definitely work. I always have to give like the counter to it, just to make sure that anybody that's new that doesn't know what the downfall of doing it that way is. And I'm not saying that you do that or anything, and I'm not criticizing the strategy. I'm just kind of trying to point out what the pluses and minuses of it are. Anyways, I have talked enough. It is now 9 o'clock, so it is time for me to go. I will see you guys tomorrow. It'll be an interesting Friday. I don't know if it's going to be super great trading, though. Today was, I'm happy that I was able to get 4 ticks, but I felt like I really cut myself short. So yeah, I'll see you guys tomorrow. And in the meantime, stay profitable, my friends.